Good evening, everyone. Welcome to Officer 24/7. My name is Neharka Walia Bhatnagar, and I'm with you with the area of AFM. Okay, so today we'll be ending our module C. The last class for module C is today, where I'm going to pick up the topic of working capital management and derivatives, everyone. These are the two topics that we'll be taking up today. Both the topics are related to the area of last part of module D. So let's look forward to it, everyone. Please let me know if I'm audible as well as clearly visible. Chaliye. Now, let's talk about the topic of working capital. Acha, what do you mean by working capital, everyone? Working capital refers to the capital which is used for daily operations of the business. Okay, in a bank, it has a different meaning, while in terms of other organizations, it has a different meaning. In terms of working capital in a bank, they have certain formulas which they use. Okay, so there are certain formulas that we'll be working on. So though there are actually three methods in terms of the working capital management in terms of the banks. But what exactly is working capital? In terms of working capital, I can say working capital is current assets minus current liabilities. That is CA minus CL. Current assets are those assets which can be converted into the assets which can be converted into cash within a period of 1 year or one operating cycle. Current liabilities are those which are to be paid off within 1 year or one operating cycle. Okay, so that's all about the area of working capital. Okay, here comes the first question. This is from the area of working capital, everyone. The first question says, what is trade credit? Everybody, what do you mean by the term trade credit? But in a business, na, sometimes you have to ask people for money. Why? What happens is sometimes we do not have that much amount of money where we can pay off everything as early as possible. You know, sometimes it is not easy. So when it's not easy, what should we do? When we are not able to pay at any point of time, na, then it is better to have any kind of credits in such a way that where we are mm, taking something on credit. That means we'll pay them later. Right now, we won't pay so that we have money with us. This is a credit given, provided to the customers by the banks, or negotiated delay in the payments to suppliers, or long term financing from the shareholders. And the last one is government grant for business. In this case, what's going to be the answer, everyone? What would be the answer? The correct answer in this case is going to be B. When we talk about this entire area, it's a negotiated delay in the payment to suppliers. Matlab, we are deciding to make the payment to the suppliers in such a way that we won't make the payment right away, but we'll make it a little later. That is called negotiated delay, everyone. Because right now we agreed that we would be paying them, but not today, but in a certain future that would be there in tomorrow. Okay. Now comes the next question. Please. The serial number is wrong. This is our second question. Which of the following statement is correct about the assessment of working capital requirement? RBI guidelines require the banks should adopt only turnover method in terms of working capital. Where this is not true because any method can be used. They haven't said any one specific method to be used. Each bank is free to adopt its own method in working capital. RBI guidelines permit to use only turnover method MPBF method for assessment of working capital. Assessment of working capital is not affected by the level of operations of the borrower. The correct answer is each bank is free to adopt its own method. There is no restriction. As I told you, there are multiple methods, but there is no restriction on which method to use. Acha, everything, there's one particular thing that I actually missed out in the beginning. Uh, since today was the day, actually the is the day of the establishment of Ram Mandir, right? So when we were doing all the work related to the foundation and the Pran Pratishtha of Ram Mandir and Ramji's, the Murti Sthapana was also there today. So ultimately it was a very auspicious day. On the eve of this auspicious day, we have decided to give you a discount of 80%. This sale is for a very limited period, rather it's just for today. You can use the code Y541 and get our courses at 80% discount. So please go ahead and hurry up and enroll yourself within today itself, so that you are able to um, take benefit of this opportunity which you have just received. So please go ahead and check it out on our website and our app for further details, everyone. ठीक है, by the end of the class I'll show you the entire portion where you can go and take the 80% discount. Please go ahead and use the code Y541. ठीक है, so go ahead and check it out. The difference between the total assets and the total current assets and total current liabilities of the firm is called, acha, now this is I discussed, it is called working capital. But what kind of working capital? Gross working capital, net working capital, or working capital management, or working capital requirement, or none of the above. So everyone, this is actually a question from our book itself. This question is given in the IIBF book. But this question given in the book is wrong. Okay, in the question, they had given the answer as gross working capital. But in actual, gross working capital is not the correct answer. Why? Because in terms of gross working capital, it is only current assets. In terms of accounting, when we talk about gross working capital, it is that form of capital which is only current assets. While net working capital is the difference between current assets and current liabilities. Right? So, in this case, there is a correction in the book. So, let's talk about it. Okay, now the difference between the total current assets and total current liabilities. If we say talk about net working capital, always remember gross means when you just add one thing. Net means when we have CA minus CL. Okay, it is basically current assets minus current liabilities. This is called net working capital. Gross working capital is basically, this is the answer given in the book. Gross working capital means only current assets. It does not include current liabilities, everyone. Done? Okay, now let's move on to what's the next question. Which one of the following is or are amongst the sources of working capital finance? Intercorporate, public deposits, factoring, or all of the above? Working capital is basically the money that we require short term. We don't require this money on a long term basis, but we actually need it on a short term basis. Why is it required? It is required so that the business can actually grow further. Okay? For that to grow further, they really need to know about all the basics. है ना? So, and whatever money is required to maintain themselves on an average basis, that is what we need, because till the time we do not have money for our daily basis, what will we do? How will we survive in the market? Because we cannot just depend upon the money that we are receiving after the completion of the work. What will we do during the period where we actually have to work? You know. So in that case, the working capital is related to the area of the short-term financial requirements being conquered. Answer is all of the above. Okay, identify the following, the correct statement regarding funded and non-funded facilities provided by banks. Both types of facilities involve transfer of money to the borrower. A funded facility may become a non-funded facility in due course or vice versa. Both letter of credit and the bank guarantee are non-funded, and all the above statements are correct. See, all the above statements are correct can be a little dicey situation. The reason is either it can be, I think, let's see. The question says both types of facilities involve funded and non-funded. Both involve transfer of money. No. Funded requires transfer of money. Non-funded doesn't. A funded facility may become non-funded facility in due course, or both the letters and of the credit. Okay. When we talk about the answers to this question, the correct answer would be C. Both the letter of credit and the bank guarantee are non-funded. In terms of bank guarantee, you're just giving a guarantee. There is nothing else you're doing now. So that means in this case, you are not giving any money, but just a guarantee that in case the other person is not able to pay, then you will pay. That's the bank guarantee. So both the letters of credit and the bank guarantee are non-funded facilities. Cash budget method of assessment is more suitable for those business enterprises which have uniform level of operations, high level of operations, low level of operations, or seasonal operations. Everyone, cash budget. Cash budget method is basically a method which is related to the area of uh, whenever we prepare cash budget, you understand the movement of cash only. You're not looking at anything else but just the movement of cash. So technically, the answer is seasonal operations. In terms of seasonal operations, you will find the variation in terms of cash requirements. During the period when there's a season, they will need more cash, and rest during the entire year, they will need lesser cash because they don't have to maintain all the people now. In an organization where people are working around the clock, for that organization, you need regular cash inflow. You need regular cash. While in terms of the seasonal work, in actual, the moment you actually need the money is the one where you have seasonal work, because that is not uniform. It keeps on varying. Okay, so these were a few questions related to the area of working capital. Now let's move on and talk about a few questions related to the area of a call option, that is related to the area of derivatives. Acha, what do you mean by derivatives? Derivatives are basically those securities where value of these securities will vary with the underlying security. Matlab, they are determined not by themselves but the securities which are underneath them. A call option is a contract which gives a buyer a right but not an obligation to buy or sell specified quantity of the underlying assets. The right but not an obligation to buy specified quantity of the underlying assets. The right but not an obligation to sell specified quantity of underlying assets. Or D, the obligation to buy or sell a specified quantity of the underlying assets. As I just told you, this is related to the area of underlying assets. Okay? Call option is where the company is going to call people कि we will pay you and give us back our securities or the shares or anything that we have given you. So in this case, it gives you a right to buy, not sell. Put would be the point, and the in terms of this, it is the right but not an obligation to buy specified quantity of the underlying assets. Okay, that is B, the right but not an obligation to buy quantity of the underlying assets. Done? Okay. Next question. Who is the regulator of interest rate derivatives in India? RBI, SEBI, FMC, or none of the above? Which organization regulates it, everyone? The regulator of interest rate derivatives, where the interest rate fluctuations are balanced, and then we have the value of the security changes with the interest rate changing. That is RBI. The regulator of interest rate derivatives is RBI. That is Reserve Bank of India. Okay? Reserve Bank of India. Done, everyone? question. Which of the following statements is or are correct about future contracts? Acha, there are two kinds of contracts. One is forward and one is futures. The difference between the forward and futures is one part is related to the area of one of them is sophisticated and not customized. The other one is over the counter. That means two parties will sit together. They will talk to each other. Ki acha, this is what we are. This is what I want to sell. Someone says this is what I want to buy. What is the price of it? They determine that part. ठीक है. The customization is there in terms of forward contracts, but in terms of futures it is regulated by the exchange market, so it is something which is way balanced. So future contracts is similar to forward contracts. This is true. Future contracts are highly liquid. They are very liquid. You can sell it at any point of time and you can actually go ahead and liquidate your funds. I'm sorry. Next is future contracts is traded on exchange or all of the above. In this case, when we talk about future contracts, future are traded and they are non-customized. Matlab they are, yes, they are standardized in nature because it is done through the exchange. The answer is all of the above. The answer is D, everyone. Which of one of the following statements is not correct about the swaps, everyone? A swap is a custom tailored bilateral agreement. It is an over the counter product. Use of this product is not allowed in India. Or swap can be used as an asset liability management tool. It is used as an ALMC, ALM tool. ALM is asset liability management. This is actually the term which is used in the banking area as well a lot. There is no restriction on swap usage in India. This is not true that use of this product is banned in India. No, you can have swap options. Swaptions are there, swaps are there. So technically, there is no specific restriction put on these organizations. Okay? Next point. Which one of the following is correct? Is not correct about the credit default swap, everyone. It is a bilateral contract. It provides protection against credit default. Under this product, the risk seller pays a premium to the buyer. What would be the correct answer, everyone? Which one of the following is not correct about credit default swap? It is a bilateral agreement. No. It provides protection against credit default. No, it doesn't provide any protection. It is related to the fluctuations where people make money out of it on the basis of the predictability they try to have. Under this product, the risk seller pays a premium to the buyer. This is also not true. In this case, not correct. All of these are not correct. Done? Acha. Now comes the credit default swap. CDS, everyone, a type of insurance for physical assets, a bilateral contract for protection against credit default, a government bond, or the mortgage backed security. In terms of the credit default swap, it is a bilateral agreement. No, but then this is also true. Then this is also true. No, then it should be which one is correct. This is wrong. I'm sorry, this is wrong. The answer is all of the above here. And in this case, it is actually bilateral contract for protection against the default. There, all the three options were correct. My mistake there. Okay? Done, everyone? Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. Now we are heading towards the next and a very important area. Acha, I'm just a correction. We have started officially the module D. Acha, what is in the area of module D, everyone? In terms of module D, we are dealing with the topic of taxation. Achha, this particular topic is super duper important. Why do I say this? Because taxation is something which is super important, as this is not only important for your examination of JIIB, but this is super important for your practical life as well, because we all are earning, we all have to pay tax. So when we have to pay tax, we need to understand taxation from that particular point of view. So it's always better that we actually understand this part of taxation in such a way that it is helpful in our practical lives as well. Acha, along with this, everyone, if you like this particular session, please go ahead and share this among your peers, because a little effort from your side would definitely be appreciated, and definitely we're looking forward to it. Done, everyone? Okay, now comes the next point. Let's talk about it. In terms of taxation, where were we? Here comes the first question. For whom is it mandatory to file income tax returns, everyone? Who is it? Only the residents, only the non-residents, और वैसे तो खैर only non-residents is just not possible. For residents, NRIs with gross total income exceeding the threshold, only for companies and firms. Always remember, anyone, there is no specific area. Companies are required to file their returns. Firms are required to file their returns. They don't have a threshold limit there. For residents and NRIs, the gross total income exceeding the threshold is there. This is not for only. The only term is wrong. It is there for all the residents of India as well as the non-residents. Anybody who is crossing the minimum limit. What's the minimum limit, everyone? The minimum limit of taxation is 2,50,000 rupees. Okay? For individual who is below 60. Someone who is above 60 up to 80, they are covered under rupees 3 lakh. And then above 80, they are called senior citizens. I'm sorry. For them, it is 5 lakh rupees. Done, everyone? These are the 3 slabs for individuals who are residents, everyone. This is for you and me because we live in India, you know. Then the people who are not residents of India, then for those non-residents or anybody else. Okay, for them the slab is 2,50,000 flat. There is no age benefit for them. The age benefit is only for Indians. Okay, so this is the concept. So in this case, the correct answer is it is for residents and NRIs who are exceeding the threshold limit. Take a moment, everyone, and note this down if you want to, or you can actually download the PDF of the same as well. You can download it in the, you can go ahead and download the app first, and through the app you can review the PDFs of all our classes. So please do the needful, because it is important that whenever we are studying, you are able to do it. Done? Chaliye, now let's move on. The topic was for residents and NRIs with gross total income exceeding the threshold. Now, second point, everyone. In which situations is it mandatory to file income tax returns? When claiming an income tax refund, when carrying forward a loss under the head of income, when having an asset or financial interest outside India, or all of the above. Acha, everyone, mandatory means it is compulsory. For whom it is compulsory to file the returns, everyone? When you are claiming the income tax refund, till the time you don't file your return, how will they come to know that you have paid tax? Right? Then when carrying forward a loss under the head of income, whenever you have losses, you have to file your income tax return in time. If you are filing it after the due date, then it's of no use. when having an asset or financial interest outside India. It is compulsory for anybody who's residing in India, though he might be less than the threshold limit, but has some interest in India, interest outside India. They have a foreign property, they have some foreign assets in terms of some deposits or anything outside India. Then you have to file your return. You have to specify your foreign income. ठीक है, be it be something which is taxable and which is not taxable. That's a different scenario. Let the income tax department decide that particular part, right? But overall, when you talk about there are foreign investments now, all the foreign investments have to be stated. It is compulsory. The answer is all of the above. ठीक है. Then comes, when can a person revise their income tax return if the return is found? Everyone, oh, if a mistake is found. Acha. Okay, the first point is anytime during the next financial year, within the next 5 years, or within the prescribed time limit, or after receiving the notice from income tax department. वैसे ना, when we talk about this, when you have a specific return, you have a specified prescribed time limit. First of all, the most important clause is you can revise your return only and only if you have filed your original return in time. If the original return was filed in time, only then this particular return will not have any problem. ठीक है, but if you found any mistake or the income tax department, then they can describe the limit. Within a limit of within the prescribed time limit, you have to file it up. ठीक है. So right now the revision or the belated returns, everything is can be done at a certain prescribed limit. The limit has been decreasing over the period of time. It was earlier that whenever you file a return, then you have the time till the 31st March of that assessment year if you want to revise that particular return. But now they have reduced it to 90 days. So that's why, since the amendments are being made in this area every now and then, so they have said that when we talk about this area, it's the prescribed time limit. Which form of income tax return is applicable for the assessment year 21-22, financial year 2021? Actually, na, we have done this. This is from the book itself. Na, they can actually change it from 2022 to 2023. The financial year should be changing as well, because this year the new syllabus has been there, and the Macmillan book can give a different question, because currently the budget is not out. So once the budget is out, they can make amendments. But there hasn't been much of an amendments in terms of the ITR there. So in this case, the answer would be ITR 1 to 7. Okay, when we talk about ITR 1 is for individuals. ITR 2 is also for individuals. ITR 3, 4 is for organizations which are the businessmen is ITR 3. For partnerships, it's ITR 4 and ITR 5. Then ITR 6 is for the companies, and ITR 7 is for the NGOs. So whenever you and I are filing a return, we will be filing ITR 1, or also called ITR Sugam, ITR 1, ITR Sugam, and there was ITR 2. These three ITRs, matlab ITR, this is actually called ITR V Sugam or ITR 1, which is for a person who is only, he has salaries and he also might be having some FTs or something, because you are earning now, then you obviously have some savings as well. So salary plus your additional returns on savings, all those are covered under this. ठीक है. If you're doing anything for your family, anything which is tax deductible would be also be done. For example, you get your insurance done, you get your children's insurance done, your sons or your daughters or your husband's insurance done. Then what will happen in this case? Your spouses, then they are also considering that part in this particular area in the tax saving. Okay, which is covered under 80C. So they are covering ITR 1 and 2, 1 and 2 specifically for you and me. ITR 2 is for the complex returns, which has multiple income as well. House property hai, then they have bought or sold some kind of land or something. Then for all those people who have complicated sources of income, then it is always better to go for ITR 2. What is the difference between taxable and the accounting income, everyone? Taxable income is the income on which income tax department puts tax, and accounting income is the income which is as per the ROC, that is Registrar of Companies. So in this case, what happens? Because obviously the Companies Act and the Income Tax Act, they don't go hand in hand. This is accrued difference, temporary difference, permanent difference, or taxable difference. See, if the laws are fighting with each other, na, you don't stand anywhere. I don't stand anywhere. Nobody stands anywhere. In this case, nobody can be taking care of anything in this case. This is a permanent difference which cannot be hindered at all. है ना? Think about it, everyone. There is no excuse to it. It's a permanent difference. Next, what is the method used to charge depreciation on the machinery for accounting purpose? Double declining balance method, straight line method, units of production method, or sum of years digit method. In terms of depreciation, somehow only these are very, there are many different methods, everyone. These four are not the basic depreciation. So if I look at the different methods given to depreciation, they would vary. Done. So now these are the methods, but when you uh, when you talk about depreciation, which particular part is recognized in terms of depreciation? Nobody is recognized and derecognized. In this case, when we charge depreciation, they have a flow chart for it. There is a flow chart in which they specify percentages for different assets plus for and for the this is flowchart is related to the area of taxation difference plus in terms of the working now depreciation is charged in such a way that acha, the businessmen can in the form of the working in terms of the businessmen when they have their own houses and they sell it, that is a part of the asset which is being sold, that is capital gain would be charged on it. And if you're charging capital gain, depreciation is also a levy na. Depreciation is levied because uh, the things are used in the market, you know, we are using it in our business. So if we are using something in the business, then we are bound to charge the depreciation. And pata hai, the depreciation has already been fixed. The depreciation fixed by the depreciation which is fixed by the Income Tax Act 1961 is something which is a slightly different one, because in terms of the income tax which we follow currently follows the same accounting year. Done. So in this case the correct answer is straight line method. Done. In this case the correct answer is actually straight line method. All other methods are not, they are used in accounting but not in this area. Done. Done. Now let's move on to the next question. Okay, then comes the next question, everyone. What's the next question? The next question is, which one of the following statements is not correct? Which one of the following is false? Done. So when we talk about this particular taxes, internet, this is based upon the Indian government followed a specific model of the which of the following is true now? Income tax is a direct tax. Yeah, it is a direct tax. Second point is income tax is the same for individuals and companies. No, it varies. You and I, we don't have the same. If you're a company and then I'm an individual, and slab goes up, then till then we are at the same level. Then when we talk about the income tax is different in object in terms of the income tax is different for domestic and Indian foreign. Now, when we talk about this particular area, the former for income tax return is different in case of different classes at at different classes of assessees. What would be the answer, everyone? Which of the following is not correct? It is a direct tax, so this is not an indirect tax. What would be the answer, everyone? Because it is a direct tax. In this case, the correct answer is actually when we talk about income tax. Income tax, what would be the answer, everyone? Which one of the following is not correct? Direct tax, it is a direct tax. It is same for the companies and individuals. No, it's not. What would be the answer? In this case, it is not same for the individuals and companies. It would vary, and domestic and foreign companies cannot be treated as the same thing. In this case, what is not true is income tax is the same as individuals and companies. For you and me, things are not the same. The taxation on one organization and another organization will always vary, everyone. Deduction in respect of donations under such certain funds, charitable institution, etc. is available under ATG, ATCC, ATD and ATU. Deduction which is respected in terms of charitable institutions. Charitable institutions is ATG, ATCC, ATD, or did you know? Then ATD, and then we have ATU. ATG is the one which takes care of the charity working. Okay, so whenever we talk about then in terms of the donations and everything, it is ATG. Done. When we talk about this particular area, when we are talking about specifically in this case, the answer is ATG, everyone. G for uh, ATG for genuineness. When you are being benevolent, you're being helpful towards the people. That is how you can take it. They have certain threshold limits as well, but thankfully in your examination, not much has been asked, and not much is given in the Macmillan book as well. So you don't really need to worry about it. I think there was a question in the examination regarding ATG as well. So it's an important area to cover. In this case, moving on to the next question, the individuals gets an option to choose between the existing tax rates and the new ones. 100 BAA, 100 BAB, triple B or BAC. When we talk about it, it is 115 BAC. This is the new tax regime which is added. And unfortunately, in the new tax regime, there is no relief of ATC. The tax burden of the new tax version is something which is costlier even. You have to pay more tax for the same amount. Done everyone? This is 115 BAC. Which one of the following statements is correct about deferred tax asset or liability? Deferred means postponed. Then everyone, when we talk about the deferred tax asset and deferred tax liability, when you pay more of tax today, you have to pay less tax tomorrow. It's an asset. If you pay less tax today and you have to pay more tomorrow, it's a liability. Done. Deferred tax assets should be classified as current assets. They are not current. Deferred tax is basically something which is related to the area of liabilities, assets, or the tax liabilities, and deferred tax liabilities should be classified as contingent uh, liabilities. When we talk about the liabilities in terms of the different areas where the deferred tax is applicable, whenever you feel your income tax is more than your profit as per the Companies Act, then switch towards this area. ठीक है ना? When there is a little, first of all, find the differences between the two and specify those differences. Done? Done. In this case, the correct answer is going to be deferred tax assets should not be classified as current assets. This is long term. The benefit or the permanent decline is on the basis of the assets and liabilities where there's a fight between Companies Act and income tax, and it can never be current. It is going to continue as the treatment in both the areas are totally different. Okay, everyone, just the ending of the class. But before I end my session, have you reviewed our courses yet? If you haven't, then please go ahead and check out our courses. What you need to do is go on to the area of Adda 24/7. This is our website www.adda247.com, and this is our profile, everyone. What you can do is check out the area of JIIB. Okay, just a moment. Now, in the banking area, open up this area, that is JIB Bank. Then click on the area of JIB Bank. JIB CIB Mahapack is there. You can take up the JIB Mahapack. You can take up the CIB Mahapack. The Mahapacks includes bilingual English medium test series, PDFs of the class, and many more options. Previous classes, current as well as the live classes, everything is open if you take up the Mahapack. So if you are planning to prepare for JIB as well as CIB, take up the JIB CIB Mahapack. And if you feel that you want to prepare only for JIB Mahapack, that is also available. Okay, what you need to do is you just have to click on the area of JIB Mahapack, and then click on the area of buy now. Click on the area of buy now and use the code Y5541 and apply it. You will get 77% discount, or if you're using coins, then you will get 78% discount. And this is available only for a limited period of time, everyone. These courses are being sold, and basically when we talk about this particular courses, these are basically taken up by all those people who are planning to prepare for a long term. Matlab JIB, CIB, bank promotions, they get associated with this specific course, and this is really beneficial for everyone for whom it becomes very difficult and cumbersome to keep on looking at all the different courses. All the courses of Mahapack would be opened up for you, bilingual English medium both. So you decide whatever way you are more comfortable with, right? So you can take up and enroll yourself in our classes. So thank you so much